Warren Buffett, often called the Oracle of Omaha, has built a legendary reputation over decades as one of the most disciplined and successful investors in history. His approach is almost sacred in the investing world: patience, value investing, sticking to companies he understands, and never chasing fads or speculation. So, when news breaks that Buffett just broke one of his own cardinal rules, the entire financial world sits up and takes notice. Wall Street, a place driven by numbers, trends, and predictability, suddenly finds itself unsettled by this unexpected move. Buffett's reputation rests not just on his incredible returns but on the consistency of his investment philosophy. He famously avoids investments that are too complicated or out of his circle of competence. He champions buying undervalued companies with strong fundamentals and holding onto them for the long term. But in recent times, he's done something that seems to go against all that wisdom. This isn't just a minor shift. This is Buffett stepping out of his comfort zone, and that shakes confidence. Why would someone who has thrived on discipline suddenly throw caution to the wind? What does it mean for the markets and for investors watching his every move? These questions have triggered intense speculation and a nervous buzz on Wall Street. In this video, we're diving deep into what exactly Warren Buffett did, why it's such a big deal, and what it might signal about the future of investing in the markets. You'll get the full story on the rule he broke, the context behind it, and the ripple effects it's causing among investors and analysts. This isn't just about one man's decision. It's about how the world's biggest financial players react when their benchmark changes behavior. And since Buffett's actions often serve as a kind of barometer for economic sentiment, understanding this could be critical for anyone invested or interested in the markets. We'll unpack the details step by step. First, we'll revisit Buffett's tried-and-true principles, what rules he follows and why they have worked so well for decades. Then, we'll zoom in on the recent event that startled everyone, the investment he made that defied his own standards. You'll hear about the company involved, the market conditions that might have influenced his decision, and how this move compares to his past behavior. From there, we'll explore the reactions from Wall Street experts, the media, and even other major investors. Does this suggest a shift in market dynamics or a potential risk ahead? Could Buffett be signaling a new strategy in response to economic changes? Or is this just a one-off exception? As we dig in, think about your own investment approach. How often do you reassess your rules? Are you open to breaking your own mold when the situation calls for it? Or do you hold rigidly to what has worked in the past? Buffett's move raises important questions about flexibility and adaptation, especially in unpredictable markets. Halfway through, I'll pause to invite you to hit that subscribe button if you want more insights like this. This channel is all about unpacking the biggest moves in finance with clear, no-nonsense explanations. And I'd love to hear your take on Buffett's latest break from tradition. Do you see it as a smart pivot or a risky gamble? Drop your thoughts in the comments below. Your perspective helps build a community of savvy investors learning from each other. Returning to the story, let's delve into the specifics of the rule Buffett broke. For decades, he has avoided tech companies, especially those with complex business models and volatile stock prices. This cautious stance stems from his belief that true value investing means understanding exactly what you own and how it makes money. Yet, recently, Buffett's Berkshire Hathaway made a sizable investment in a high-profile tech company, one that doesn't fit neatly into his usual criteria. This caught analysts off guard because it's a clear departure from his principle of sticking to businesses he understands. So, what drove this decision? Market conditions have shifted in recent years, with technology becoming an even more dominant part of the global economy. Some traditional sectors have struggled to keep pace, while tech giants have amassed massive profits and influence. Perhaps Buffett recognizes that the landscape is changing, and to maintain Berkshire Hathaway's growth, he needs to adapt. Or maybe the specific company offered such an attractive valuation or strategic advantage that Buffett's usual rules had to be bent. Either way, this move forced Wall Street to reconsider its assumptions about Buffett's investing style and the signals he sends. It's also interesting to note that Buffett has been cautious about jumping into newer trends like cryptocurrencies, startups, or speculative ventures. His recent tech investment, however, seems to straddle the line between innovation and established business. This blurring of boundaries has created a mix of excitement and anxiety among investors. Could this be the start of a new Buffett era, more willing to embrace disruptive sectors? Or is this simply a calculated exception, a rare gamble that still fits within a broader conservative strategy? Another angle to consider is Buffett's age and legacy. At 90+ years old, he may be thinking about succession and positioning Berkshire Hathaway for the future beyond himself. Investments like these could reflect a forward-looking mindset, aiming to future-proof the company's portfolio even if it means stepping outside comfort zones. This human element adds depth to what might otherwise be seen purely as financial calculation. It's a reminder that behind the numbers is a person making complex decisions shaped by decades of experience and evolving market realities. Wall Street's nervousness partly comes from uncertainty. When Buffett breaks his own rules, it suggests that something significant is changing. Investors tend to follow Buffett's lead because of his proven track record, so his moves can set off waves of buying or selling. This time, the move prompted questions about whether it's signaling a broader market shift or potential risks ahead. Are traditional value stocks losing favor? Is tech becoming unavoidable even for the most disciplined investors? Or could this be a rare anomaly that won't repeat? The responses vary widely. Some analysts praise Buffett for his adaptability, seeing it as a smart move to stay relevant in a fast-changing world. Others warn that this could expose Berkshire Hathaway to greater volatility or risk. This division of opinion adds to the tension, showing how influential Buffett's actions remain even after decades of success. Now, if you've made it this far, don't forget to subscribe for more videos that break down the biggest financial stories with clarity and insight. I want to know what you think. Do you trust Buffett's move? Or are you skeptical? Share your thoughts below, and let's get the conversation going. Your perspective might be the key to uncovering what this all really means. To wrap up, Buffett breaking his own rule is more than a headline. It's a window into how even the most legendary investors must evolve. Markets don't stand still, and neither can strategies if you want to stay ahead. This episode reminds us that rules are important, but so is knowing when to bend them. As investors, the lesson here is to balance discipline with flexibility, to stay informed, and to watch carefully how the titans of the market adapt to new realities. If you found this story fascinating, make sure to check out our other videos where we analyze historic moves and financial trends that shape the world economy. Don't forget to leave a like if you enjoyed the content and want more deep dives like this one. And if you think this was surprising, wait until you see what's unfolding next in the world of global finance. There's a